Good evening, esteemed ladies and gentlemen. And again, we are here with yet another episode of uh, GST Important Changes in the Budget 24 with CA Bimal Jain sir. And before we start, again, I would like to say that Bimal sir and together with Zoho Books had a lovely session in Jaipur last week on 23rd, where it was graced by 50 attendees who were all CA practitioners and colleagues like us who are here right now. And it was such a graceful event. I think you should have been there, or whoever can make it there should have seen the magical session that we had, where Bimal sir, even though we said that, sir, 45 minutes of a session is enough, but it went on for 3 hours, and it would have gone even more if not for Bimal sir, who said that let's have dinner, because sir himself is not having dinner after 6 p.m., but he was concerned about the attendees. And even then, the attendees were like, sir, if you are willing to go, we are willing to listen. And it stretched even for 30 minutes more. So that beautiful of an event it was. And we thank from our heart to Bimal sir for having that particular magical hold towards those session. But today, we all know Sir C.A. Bimal Jain, sir, is a renowned chartered accountant completing his accountancy in the year of 1990s. But today, I want to change this introduction in a certain way, because in that particular session, we got to know about the boy with a dream, and the boy with the dream of speaking, who went on to speak and defeat the world record, having 4,500 plus attendees grace his GST session. So that day, when we asked the attendees that who is knowing this particular story, out of 50, only three rose their hands. And trust me, when Sir was talking about it, you could see the motivated people when Sir completed his story. So today, I don't want to take any time in introducing the legendary Sir, because we all know his achievements. But I would request Sir to introduce the boy who had a dream to the man, the legendary, the visionary person who has achieved this target. So, Sir, again, I'll repeat that question to you, that, sir, when you were young, you were studying, you were students, did you have the dream that today, sitting here, you will be receiving love and affection of so many people? Please, sir, dice is all yours.
At the outset, Hers, once again, thanking you for your lovely introduction and again, a question to start with. I can only tell you, Hers, in brief, just one liner: without dream, no life.
Absolutely.
And I hope my all the participants will agree with me that we must dream. And dreaming is important, but with dreaming, we should put our efforts, commitment, dedication, sincerity. Believe me, once we start looking at what we want it to be, and then we start putting our sincere efforts, commitment, dedication, hard working, then definitely what we are dreaming, we will definitely achieve. None can stop us. It
Absolutely.
is we who are bottleneck for ourselves. None is creating bottleneck for us. If we are not competent enough and we don't feel confident about ourselves, who else going to be? So I can just tell you one and one thing: believe in yourself and the Almighty God. Put your dedicated efforts, sincerity, commitment, hard working. Rest, God will look after. So
Absolutely.
that is my answer to each one of you. Start dreaming. Dreaming is one of the way we start thinking good perspective, positive perspective, and that is how life is all about. So dream, but do all the efforts to achieve that. That is what called a great combination, what we want it to be and how we can achieve the same. So this is the answer of your question, Has. Hope all the participants will agree with me. I do not know to what extent, but within 1 minute or 2 minutes, I have said what was there in my mind. Hope all the participants agree with me. And there's a question answers tab. You can always write back whatever you have in your mind.
Absolutely. So, without much ado, but obviously, I want to add one more very important thing, that sir just does not say, he walks the talk. And there was a very shy and obedient colleague of sirs. She was a female, and she just before the event texted sir that, sir, I also want to be a speaker like you. What should I do? And sir said, just start. And he brought her there, and what a lovely introduction she gave. So sir is not someone who is just motivating, but he is actually walking the talk. So with this, I will be handing over to sir to and I will, but I'm 100% sure we will have a great session going ahead. So thank you, sir, and the dice is all yours.
Thank you, Hers, for once again lovely introduction, and thanking Bimal Kishore writing first comment in question answers tab. Thank you, Bimal. You are also Bimal Kishore, so I said your name. So I will request my all the participants that be interactive or write something in question answers tab whenever you feel like. Yes, topic is a little different, but very interesting and very important one. Today we are going to discuss the important changes which is being proposed in Union Finance Bill 2425. So what are the important changes suggested? There are only three clauses in Union Finance Bill 2425. We all know it was interim budget. Full-fledged budget will come in the month of July 24 once general elections are over. So this interim union bill contains three clauses pertaining to GST related changes. We are going to discuss those important changes. Alongside, I'm going to discuss one important judgment coming from Madras High Court, ICER Motor Limited. And the issue in that particular judgment was, and we have seen in the trade, that you as a taxpayer deposit the money in your e-cash ledger, but somehow you could not file your 3B and there was a delay. But you have deposited the specified amount before due date in e-cash ledger. Whether interest going to be levied when you are filing 3B and which is delayed filing, but otherwise you have deposited the amount in your e-cash ledger. That is the only problem, but we are finding a lot many so-called notices department is issuing and they wanted us to pay interest also. So I'm going to discuss this judgment also. And then last, the important topic. Now, we all are moving towards sequential filing of GST return. So what is the sequential filing? Why it's important? And what are the things we should know about sequential filing of GST return? We are going to discuss today. So 4 important topics in 1 hour, maybe 15 minutes plus, then followed by question answers. So before I start, can I see yes? Can you give me thumbs up? Can you say yes? I should start with question answers tab is the important tab for our interaction. So you can say yes or thumbs up. Both will work for me and we can start with. Thank you very much. So there's so many, Mr. Mohan Kumar. He happened to be, SGST officer from Tamil Nadu. My friend from AP, Suryam is also there. Hemant is there. Lot many guys are there. So thanking each one of you, and without taking much time, get set, start. As I said, and you can take a piece of paper for your important noting down the provision and the changes which I'm going to discuss today. See, there are 3 clauses, clause number 11, 12, and 13 in that interim finance bill 24 pertaining to GST changes. The first important change is pertaining to ISD, Input Service Distributor. So what is this Input Service Distributor? how it is different from cross charge, what are the changes proposed, and what need to be followed, we are going to discuss in this particular point. Let's start with ISD, as we have seen in pre-GST era under service tax regime. ISD is what? An office of supplier of goods or services or both, who is procuring third-party invoices pertaining to common input services. Third party means a supplier who is an outside supplier raising invoice to the office of supplier of goods or services and for common input services. So for understanding this particular concept, I need to take an example. Let's take an example. Let's say I'm a company registered in Delhi. My head office and corporate office located in Delhi. But I got 3 other registration also. Let's say Tamil Nadu, Karnataka, and Andhra Pradesh. So under same PAN number, we are having 4 registration: Delhi, Tamil Nadu, Karnataka, and Andhra Pradesh. Now, we have seen in the trade that there are a lot of common input services invoice are being raised to the head office or corporate office or registered office, which is Delhi. What could be common input services? For an example, that audit services, security services, advertisement. So what happened? There's a contract with the company and a service provider who is a third party outside service provider raising invoice to head office but giving services to all 4 units including Delhi. So they are giving services in Delhi also, Karnataka also, Tamil Nadu also, Andhra Pradesh also, but raising invoice to head office Delhi only. So what Delhi will do? Can Delhi take full credit? Because this particular service is being given to 3 other units also under same PAN number. So first concept, if a company taking 4 different registration in 4 different states under same PAN number, they are called distinct person. Now this third party who is raising invoice for advertisement or for maybe audit services to head office Delhi, they have given services to all 4 units, but charging GST to Delhi only. Whether Delhi can take full credit, this is the question. Now, in pre-GST era, concept was very clear. In GST also, but GST, there was certain ambiguity, no clarity. Even the ISD provision was not mandatory. So otherwise, concept would be Delhi would be taking this credit as a normal concept and would be distributing credit to 3 other units, Karnataka, Tamil Nadu, and Andhra Pradesh, in terms of their utilization or pro rata turnover basis. That is the ISD concept. And for that, Delhi needs to take ISD registration, Input Service Distributor registration. This is the ISD concept. So first of all, before I move, I want to see yes in question answers tab. At least you understand the meaning of ISD. What is the meaning of ISD? Am I clear to all? If clear, say yes in a question answers tab. It will help me to proceed further. If I can see yes in question answers tab, it will help me a lot. All right. Thank you very much. Now, GST started from July 1, 2017. But we have seen that lot of taxpayer has not taken ISD registration. Obviously, because it was not obligatory, not mandatory. So what they have done, instead of ISD registration, they have taken full credit in Delhi and then cross-charge to 3 other unit separately registered under same PAN number. They have followed the concept of cross-charge. They have not taken ISD registration. So what is cross-charge now? Cross-charge means, which is not defined in GST law, but what is the meaning of cross-charge? Supply of services by one registered unit to another registered unit, and they are distinct person because separately registered under same PAN number. So take the same example forward. I'm a company, as I said, head office, corporate office, or registered office in Delhi, but I got 3 other unit registered in 3 different states. So we all are distinct person. So what they have done, instead of ISD registration, they took the credit in Delhi and then cross-charge. They have raised the invoice to 3 other unit and passed on this credit to them as a normal supplier of service. Whereas they should have followed the concept of distribution of credit. So cross-charge is a different concept. ISD is a different concept. Just one silver lining difference. In cross-charge, there should be element of service from Delhi to Karnataka, Delhi to Tamil Nadu, Delhi to Andhra Pradesh. For cross-charge, there has to be element, supply of service. But for distribution of credit, there should not be any element. You are only procuring, taking credit, and distributing the credit. So there need not be any element of service. So that is the broad differential concept in cross-charge versus ISD. Second component. Coming to the third component of this issue, since ISD was not mandatory, 50th GST Council meeting, they have acknowledged this position that it was not obligatory. And a circular number 199 dated 17th July 2023 issued, and they have said, circular is saying so, that if you are not registered as a ISD, which you were supposed to, since it was not obligatory and you have followed the cross-charge method, there will not be any problem. That's what they have in that circular, circular number 199. But 52nd GST Council meeting has categorically said and recommended that they are going to make ISD registration compulsory, mandatory. Keeping this recommendation in mind, that the corresponding change, and this change is brought in the CGST Act through changes as proposed in this Union Finance Bill 24-25. First of all, they have made the amendment in the definition of ISD. Section 2, subsection 61 of CGST Act. What is the definition of ISD? Definition of ISD is, ISD means an office of supplier of goods or services or both, who is procuring common input services invoice. Under section 31, this was the reference before. Now they have done away, they have omitted the reference of section 31. So they are saying you are a ISD, Delhi is the ISD, taking tax invoices pertaining to input services, including input service invoice, which is falling under section 9 subsection 3 and section 9 subsection 4 of CGST Act. Now let me explain to all of you so that you can understand and you can vouch that you got it. They're saying ISD now will get the invoice. ISD, input service distributor, will get the invoice of input services. So when we talk about distribution of credit, it is only restricted to input services. On input and capital goods, if some GST charge, that credit cannot be distributed. First clarity you should keep to your mind. Whenever we are talking about ISD, it is only for distribution of credit pertaining to input services, not on input, not on capital goods. Second, if I happen to be Delhi, head office, corporate office, registered office, and taking certain invoices for input services which are commonly used, or it can be exclusively for a particular branch, maybe Tamil Nadu, or maybe Karnataka, or maybe Andhra Pradesh, but that is mean to them. But you got the invoice at Delhi office. In such cases, you will take ISD registration, input service distributor registration. Another problem which they have clarified in the amended definition of ISD is, you would be knowing that in recent past, ISD registered unit was not in a position to discharge reverse charge liability. Under section 9, subsection 3, reverse charge liability means the notified services as per notification number 13/2017, reverse charge liability, and certain input services falling under section 9 subsection 4, where recipient need to discharge the GST liability. ISD was not able to do that. So what they were doing in the past, some of them doing in the past, they were first discharging the GST reverse charge liability as a normal registration, then transferring this credit by cross charge to ISD registration, then ISD was distributing the credit. This was the mechanism they were following. Now with the amended definition, ISD office can even pay reverse charge liability, which is being notified under section 9 subsection 3 or section 9 subsection 4 of CGST Act, along with certain input services invoice which they are getting from third party supplier of services pertaining to common input services. So ISD can take credit of those invoices and distribute the credit to other distinct person under same PAN number. So this is now being permitted. So ISD can discharge reverse charge liability as well. They have substituted section 20, completely substituted, and now saying ISD registration going to be compulsory. So you should forget, you should done away whatever you have read in circular number 199. Henceforth, ISD registration, it's compulsory, meaning thereby you can't follow cross-charge for the distribution of credit. For that, ISD registration is a must, but from a date to be notified. Prospective. It is not applicable for the past period. From a date to be notified. And once you take the credit, you can distribute the credit to your other registered unit who are distinct person, either in terms of their utilization or turnover criteria. And these all formulas how to distribute. Rule 39 you must be recalling, right? So they are going to prescribe now once again, because section 20 got completely substituted. That is the way you need to distribute the credit to your other branch offices, Tamil Nadu, Karnataka, and AP, who are distinct person under same PAN number, need to be followed. So crux of this change is ISD going to be compulsory for distribution of credit only pertaining to input services from a date to be notified. ISD now can discharge, reverse charge liability, take credit, and distribute credit to other registered unit who are distinct person under same PAN number in a manner as may be prescribed. So this is the first change pertaining to clause 11 and clause 12 of Union Finance Bill 24. Am I clear to all? If I'm clear to all, I need to see thumbs up or yes in question answers tab. Can you say yes that you got it? And thumbs up from your side that yes, it is clear to all of you. So now what is cross charge? Let me explain that part as well. So now you can't follow cross charge method for ISD concept, distribution of credit, but from a date to be notified. Cross charge as normally understood. Are you recalling entry 2 of schedule 1, deemed supply? Supply of goods or services or both between distinct person or related person in the course or furtherance of business, even without consideration, is a deemed supply. So what is cross charge? Try to understand with the same example. I'm registered in Delhi, registered office in Delhi, which is head office or corporate office. And there are 3 branches, Tamil Nadu, Karnataka, and AP. So am I really providing any services to my branches? This was the first question, right? Am I? And why this question is coming? Because my CMD, Managing Director, CFO, CEO, common HR, IT, accounts team, all are sitting in Delhi. But they're looking after operation of my all other branches under same PAN number. So am I, Delhi office, is really giving services to this Tamil Nadu, Karnataka, and AP? It is subtle jurisprudence now. We have seen the judgment, AAAR, Columbia Asia Hospital, Cummins India Limited. It's a deemed supply, completely deemed supply. And this is called internally generated services. In ISD, there was third-party services. But for cross-charge, it is internally generated services provided by Delhi to Karnataka, Delhi to Tamil Nadu, Delhi to AP. In supply, even though there is no consideration. So what should be the valuation? Next question. Must be recalling Rule 28 of CGST rules. And rule is saying it should be open market value or like kind and quality or 110% of cost of provision of services or residue method. But very difficult. You can't arrive at open market value for these kind of internally generated services. Even you can't get a value for the like kind of services. Very difficult. Of course, 110% of cost of provision can be arrived at. So for daily, you can arrive at the total cost and then marking up with 10%, and then you can raise the invoice to Karnataka, Tamil Nadu, and AP. That is doable. But there were certain disputes. And those disputes got clarified in circular number 199, dated 17 July 2023. And listen this part very carefully, very carefully. Rule 28 has got second proviso. Very interesting one. The second proviso is saying if recipient unit, which is Karnataka, Tamil Nadu, and AP, is entitled for full ITC, full input tax credit, then supplier Delhi can take any value and that shall be deemed as an open market value. Very interesting one. If my recipient unit is entitled for full ITC, then supplier of service can take any value and that would be considered, word shall be deemed open market value. Keeping this concept in mind, this circular number 199 is clarifying a position. What they are clarifying a position? First, for past, I know a lot of taxpayer has not raised cross-charge invoice. Lot of taxpayer. This circular is beneficiary and it is clearly saying if recipient is entitled for full ITC, then a supplier can consider the value as nil. Value as nil. So that there is no question of any dispute or litigation for the past period, That is what this circular is clarifying. Because past period, there was ambiguity, dispute, was there cross-charge, whether GST leviable, if leviable, what would be the valuation? So this is the first point they have clarified. Second point, yes, we need to arrive at total costs for Delhi and then 10% markup. As an alternative method, open market value, like kind and quality, 110% or residue method. Keeping the second proviso also in your mind. So, second pointer, if recipient is entitled for full ITC, then you can take any value. It need not be 110%. Any value and that shall be deemed as an open market value. So you can decide accordingly. Second point. Third point. There was dispute while arriving at total cost whether salary cost need to be added. Salary cost, whose salary cost? CEO, CFO, common HR, IT, accounts team, their salary need to be included in arriving at total cost, total overhead cost. This circular is clarifying in a very clear terms. Salary need not be included. In arriving at total cost. Whether recipient is entitled for full ITC or not entitled for full ITC. And not entitled can happen only in exempted sector, like healthcare, like education. They're saying salary need not be included. And we have conveyed this position in the past because salary is one of the component of Schedule 3, neither a supply of goods nor supply of services, need not be included. But this circular is now clarifying the same. So that will give you the advantage. But if recipient is entitled for full ITC, any value can be deemed open market value. But those who are into exempted sector, at least to the extent of exclusion of salary, will be benefit in their hand. Because to that extent, they should not include in overall overhead cost, making it 10% markup and then raising invoice to your recipient unit. So clarifying a position, if you are into exempted sector like hospital, when recipient is not entitled for full ITC, then you have to follow 110% formula. For arriving at 110%, salary cost need not be included. That is the advantage you are getting. This is being clarified in this circular. So this is cross charge with respect to clarification in circular number 199. Hope I'm clear to all of you. Can I see yes, thumbs up, and yes in question answers tab? Can you say thumbs up and yes in question answers tab? Thank you very much. So at least my audience got it. Thank you very much. Thank you very much. So this is ISD and cross charge. Coming to the second point of discussion today. There's one new section, section 122A, now going to be introduced and going to be notified, which is clause number 13 of this Union Finance Bill 25. What is the section 122A? This is saying, before that, let me tell you some background so that you can understand. This 122A is talking about penalty of 1 lakh rupees per machine. If you happen to be a manufacturer of specified goods, what are those specified goods? Tobacco, pan masala, gutka. Government has issued a notification. Initial notification was 30/2023, 31st July 23, which got rescinded by notification number 3/2024, 5th January 24, and then reintroduced by notification number 4/2024, 5th January 2024. For manufacturer of specified goods, tobacco, pan masala, and gutka, there was a special procedure prescribed for registration. And as per this special procedure, whatever machine they are using for manufacturing of these specified goods, these machines need to be registered. Why they have brought this provision for this particular sector? Because a lot of tax evasion was envisaged. Government has seen a lot of tax evasion is happening in this sector. So they have specified a special procedure as per section 168 by notification number 4/2024, dated 5th January 24. They need to take compulsory registration machine-wise. If they don't take a registration of machine which is being used for manufacture of these specified goods, then there would be penalty of 1 lakh rupees per machine, believe me, per machine. And that too, in addition to this penalty, 1 lakh per machine for non-registration, in addition to all other penalty under Chapter 15 and Chapter 19 of CGST Act. So not only 1 lakh rupees, 1 lakh rupees in addition to other penalty as specified in Chapter 15 and Chapter 19 of CGST Act. So now stringent provision. And 122A start with the non-obstante clause, notwithstanding anything contained in this act. So please, overriding everything. So 1 lakh rupees now going to be compulsory plus penalty under Chapter 15 or Chapter 19. If you have not taken registration, then your machine is liable for the seizure and confiscation. It can be confiscated, but confiscation can be avoided by payment of penalty within 3 days, from the date of communication of penalty order. That is what section 122A pertaining to special procedure registration of machine for specified goods. If you are not registering, penalty. In addition to chapter 15 and chapter 19. Hope I'm clear to all of you. This is what the new section going to be introduced and going to be notified, and it will be prospective. It is not retrospective. From a date to be notified. This is on 122A. Am I clear to all? If I'm clear, can I see hands up from all of you? Can I see hands up from all of you? If you can say, yes, sir, it is clear, or you can write yes in question answers tab, it will help me. So a lot of you are writing also. So Harinder Kumar is writing, Bhabin is also writing, Muhammad Arsad is also writing. So thank you very much. Clear. Well, Arjun is saying, yes, sir, thanks. Thank you very much. So thank you very much and clear. Mr. Mohan Kumar is also saying, yes, clear, Ji. Now coming to the next discussion, important discussion. We have seen in recent past, I'm a taxpayer. I need to discharge GST liability, and this is being discharged while filing GSTR 3B. And for discharging GST liability, I got two options. I can use my e-credit ledger also, and differential, whatever might be, which is net tax liability, can be paid through e-cash ledger also. But what happened in the past that you might have deposited the money in your e-cash ledger, but you could not file your 3B for any reason whatsoever. But money was deposited in your e-cash ledger. You filed your 3B belated, late filing was there. Question is whether interest can be demanded by the department, GST department, even though you have deposited the differential amount, net tax liability amount in e-cash ledger, only you could not file your 3B. Whether they can demand interest, yes or no. I want to see this answer in question answers tab. Now, I'm not looking for hands up. I want you to write in question answers tab whether they can demand interest, yes or no. That should be your answer, or that's what I'm looking for. So Mehul is saying, yes, sir. Jagat Pandey is saying, yes, sir, they can demand interest. I want answer from each one of you, and there are a lot many saying, no, can't be. So listen very carefully. Listen very, very carefully. This is a very interesting one. This issue has gone before Madras High Court in ICIS Motor Limited. What happened? The petitioner could not transfer their accumulated Sanvet credit of pre-GST era, around 33 crore rupees. They could not transition into GST regime because of technical glitches. 33 crore rupees, they could not transition into GST regime because of technical glitches. And thereby, they could not file their 3B for the month of July 17. As a domino effect, when they could not file 3B for the July month, July 17, they could not file subsequent period 3B starting from August 17 to December 17. They could not file 3B because of this reason. But what petitioner did, for an example I'm explaining to you, let's say their liability was 100 rupees. Let's assume 100 rupees. And they're having 80 rupees in their e-credit ledger. So what they did, they have deposited 20 rupees in their e-cash ledger, before the due date of furnishing 3B for relevant tax period. For understanding, let's say we are in the month of February, and for February 3B will go on 20th March. So what this petitioner did, that 20 rupees, which is differential payment, they have deposited into e-cash ledger on or before 20th March. If you look at the transaction wise, then they have paid. Only because they could not file 3B for the region, their accumulated standard credit could not be transitioned into GST regime because of technical glitches, and thereby they could not submit 3B. Otherwise, everything was complied with. Department, as usual, sent a recovery notice that we want to recover this interest amount from you. Now, I want to give you the background of the provision. Let me first tell you the judgment, and then I will tell you why this judgment is being passed by Honorable Madras High Court. Honorable Madras High Court has said no interest. You can't levy interest. If taxpayer has deposited the money in e-cash ledger before the due date, you can't demand interest from him. You can't. And why it is being said so? Certain things are being relied upon in this particular judgment. So listen those provision, which is very interesting. First one. Section 39, subsection 1. It is talking about every registered person except ISD, non-resident taxable person, composition dealer, TDS deductor, tax collected at source. Except these guys, every registered person must file 3B electronically on monthly basis. And this 3B would be containing your inward supply, outward supply, credit availed, tax payable, tax paid, all these specified particulars. So 3B is compulsory, right, for all registered person. As per section 39, subsection 1. Section 39, subsection 7. It is saying that as per 3B, whatever is the tax due, you must pay. You must pay not later than last date for furnishing such return, not later than. Means you must pay on or before. So for example, which I have given, February month 3B need to be filed by 20th March. Then you must deposit the tax on or before 20th March. That is what section 39, subsection 7. Now the question before the court was, honorable bench was, money deposited in e-cash ledger, which is not appropriated because 3B could not be filed, can be considered as a payment, can be considered as a credit to the government account. For that, an explanation read with section 49, subsection 11 of CGST Act is being relied upon. 49, subsection 11 read with explanation is being relied upon. What is this 49, subsection 11? 49, subsection 11 is saying, Bimal, when you're depositing some money in e-cash ledger, it will be termed as credited to the government account. Credited to the government account. 49, subsection 11. An explanation is also endorsing this view. Whatever amount deposited in e-cash ledger shall be deemed, word used, shall be deemed credited to the government account. But why department dispute? Department is saying, no, Bimalji. Depositing money in e-cash ledger, it is not has reached to us till the time 3B is being filed. That is what department case. Department always make this point, no, depositing in e-cash ledger, it is your money. It is not coming back to us. But 49 subsection 11, an explanation is saying it gets credited to the government account. First part, it was relied upon. Second, there is a frequently asked question which is issued by RBI, Reserve Bank of India. And this specific question is being asked while discharging the liability. If some money gets deposited in e-cash ledger, what is the treatment? This FAQ issued by RBI is saying that it gets credited to the government account maintained with RBI. See, I'm again endorsing. Frequently asked question saying the money gets deposited in e-cash ledger, gets credited to government account maintained with RBI. So again credited. Coming to the third component. This petitioner has filed an RTI under RTI Act 2005, Right to Information Act. And they asked one question: when government is publishing data for GST collection, are they including any amount which is being getting deposited in e-cash ledger? Ministry of Finance, Department of Revenue under Ministry of Finance has responded, yes, whenever we are publishing data of GST collection, we are including this component amount deposited in e-cash ledger, because this is credited to the government account maintained with RBI. It is being included. The three back-to-back provisions, FAQ and RTI, endorsing that this money gets deposited in e-cash ledger, gets credited to the government account. I hope up till now we all are clear. I'm giving you one background to you, one more background. Until recent past, we have seen when GST got started, if you have paid some amount in e-cash ledger, it was not easy to take that money back. For that, there was specific refund order to be passed by a proper officer. Recently only they have opened the window that you can file the refund claim under any other category and smoothly you will get back your money. But previously it was not easily available. Once you have deposited, it gets blocked. So it was not easy for a taxpayer to get back their own money. And department always used to say, Bimalji, it is your money. Unless you file 3B, it is not appropriated and it is not coming back to us. But why then these information, these provision? FAQ of RBI is saying it gets credited to the government account maintained with RBI. Even GST figure which is being shown, it's inclusive of this figure. So my only submission is these three provision. And then they have said, credited to the government account, and when 3B file, it gets debited, right? It is only accounting entry. It is already deposited by the petitioner. When filing 3B, he is debiting the same. So it is only accounting entry effect is being given. So why it will not be considered as if deposited? It was considered the money which deposited in e-cash ledger is as good as tax paid. Very interestingly, I can tell you the reference subsection 50 subsection 1 is also being discussed in this judgment. What is section 50 subsection 1? We all know if there's non-payment or short payment. Non-payment means if you're not making payment of tax or there's short payment of tax. Interest going to be levied. Am I right? Interest going to be levied. As per section 50 subsection 1. Keeping this provision 49 subsection 11 read with explanation, FAQ issued by RBI, RTI answer being given by Ministry of Finance, Department of Revenue, keeping this all backup provision in the mind relied upon, when money gets deposited in e-cash ledger is as good as payment credited to the government, then there's no short payment, no non-payment. Why interest going to be levied? There should not be any interest leviable then. There's no question of interest under section 50 subsection 1, no question. This is one point they have considered. And while going through, there is a proviso. I do not know how many of you have seen that proviso. A proviso is being given under section 50 subsection 1. And it is clearly saying that interest going to be levied only on net tax liability, which is paid through e-cash ledger while debiting the same, while filing your 3B. Debiting, the word used, debiting. This point was also discussed in this Madras High Court judgment that said a proviso cannot take away the meaning of main provision. When as per 49 subsection 11, amount deposited in e-cash ledger credited to the government, it is as good as payment made. Why you are creating a proviso and saying unless debited by filing 3B, it is only accounting entry. Otherwise, it gets deposited to your account, maintained with RBI. So this proviso is going contrary to the main provision of section 50 subsection 1. I want to understand from all of you. Have you understood the meaning of distinction, main provision of 50 subsection 1 versus proviso? Am I clear to all? If you am I clear, then either thumbs up or yes in question answers tab. That you understood it. You have understood that meaning which I've said. Okay, very well done. So a lot of you are saying yes. Thank you very much. I want to see more yes from each one of you so that I feel like that you all are getting my point. So lot of yes. Okay. So there's just one guy. Piyush is saying no, please repeat. Piyush, you're the only one in the whole audience who want me to repeat again. Okay, for the sake of benefit, just 1 minute more. I am taking 1 minute more for helping Piyush and others as well. So Diksha is also asking me, please repeat. Okay, so Diksha is adding up with Piyush also. No problem. Listen very carefully. 49 subsection 11 read with explanation, saying that whatever amount deposited in e-cash ledger shall be deemed credited to the account of central government. Credited to the account of central government means it has gone to the credit of central government. It is as good as tax paid, right? Only 3B is not filed, right? Now come to section 50 subsection 1. Main provision is saying, Diksha and Piyush, main provision is saying that interest is leviable when there is non-payment or short payment. When 49 subsection 11 read with explanation clearly saying amount deposited in e-cash ledger shall be deemed credited to the government, then there is no question of non-payment or short payment. Why interest is leviable? A proviso after section 50 subsection 1 is saying that interest going to be levied only on net liability paid through e-cash ledger by debiting the same. Why are you creating this provision by debiting? It is only accounting entry. And this by debiting, you are overriding the meaning of section 50 subsection 1. And as per 50 subsection 1, it is already being paid. So this proviso is going contradictory to the main provision. Thereby, if amount deposited in e-cash ledger shall be deemed credited to the government, means it is being paid. That's what I have said. Am I clear now for Diksha and Piyush? Am I clear? I have repeated and communicated once. All right. Am I clear? So Piyush and Diksha. Okay. All right. Now, this judgment is very good, helping all of us together. But I've got different context now, I want to discuss with all of you. And all of you will agree with me, Bimalji, this is a very valid point. You have raised very valid point. I can be spokesperson for all of you. I regularly interact with them, with the CBIC and GST Council, get lot many opportunities. I always interact with them and try to pass on the grievances of taxpayer, trade and industry and commerce. Recently, I was talking to them. What I told them, listen very carefully. I said, sir, and listen, this part is very interesting. I can tell you, if this is being accepted, it will provide a better relief, a greater relief. I can tell you better and greater relief to all of us together. GST liability is accrual basis, right? Even though we have not collected, we have to pay. If we don't pay, interest at the rate of 18% per annum. Am I right? If we don't pay. What law and GST and portal is doing for us? At one hand, it is accrual liability. If I don't pay, interest at the rate of 18% per annum going to be levied. Alongside, they are not allowing me to file my 3B if I am not having enough working capital. Quite obvious, I'm running with financial crunch, acute financial crunch. I have not received money from my client and customer. Where from I will pay the money? So quite obvious, there might be delay. But you're not allowing me to file 3B unless I pay the tax. So if I don't file 3B on time, you know time limit condition, section 16, subsection 4 of CGST Act. Earliest of due date of furnishing return under section 39 for the month of September following the end of relevant financial year, which is 20th October, or due date of furnishing annual return, whichever is earlier. So this due date of furnishing return for the month of September under section 39 following the end of relevant financial year is being done away with. It is now 30th November and changes are effective from 1st October 2022. What suggestion I gave, I'm telling you. I said, sir, I'm not being able to file 3B because I'm not having enough cash. You're not allowing me to file my 3B because I'm not able to pay. Thereby, you are denying my credit, saying that it is beyond time limit as per section 16, subsection 4. That is the one worse, means negative part of GST. And second, whenever I pay this delayed payment, I will pay interest, 18% per annum. So you will take interest from me and you will not give me the credit because you're not allowing me to file my 3B. Allow me to file 3B, even without payment or non-payment or short payment. At least I will avail my credit so that this disputed point will go away. And whenever I'm making payment as per this 3B, I will pay along with interest. You are being paid interest. So government revenue exchequer's point is being protected. Simultaneously, win-win situation, 3B is being allowed to be filed with non-payment or short payment, my credit remain alive for me, which is being bottleneck, and we have seen in recent past lot of litigation. Recently, we have filed SLP in Supreme Court against judgment of Patna High Court. Lot many judgment has come on constitutional validity of Section 16, subsection 4, starting with AP High Court, Thirumalakonda Plywood, Patna High Court, Govinda Construction, Calcutta High Court, BBA Infrastructure Limited, Chhattisgarh High Court, Jain Brothers. SLP is being filed in the Supreme Court. Notice is being issued to the revenue, even for the interim relief also. But the point suggestion which I have shared just a while ago with all of you, is it not worthwhile? Why you are not allowing me to file 3B without non-payment, with non-payment or short payment? Let me file my 3B. At least my credit availed is being kept alive. And you take your GST delayed payment along with interest, who is stopping you? So that you are being protected, and a taxpayer right, vested right, is also being protected. Do you all agree with me? If you really agree with me, I want to see your thumbs up that yes, this point is a very valid point which I have raised and raised as a representation. I really want to see that contention from each one of you. Okay. So now my submission that you should also raise this concern to the government authority wherever you go and represent the trade, industry and commerce. It is our reasonable expectation. I'm saying reasonable expectation from GST if we want to see seamless flow of credit. Otherwise, it's cascading, right? Why you are putting that bottleneck that I can't file 3B unless I pay the amount? Why such provision? These provisions are not with the context of Constitution Amendment Act, which pave way for GST introduction in the country. Going contrary. Look at this situation which I'm referring here. Look at the situation with judgment I'm referring here. This petitioner could not file 3B because 33 crore rupees could not be transitioned because of technical glitches. Otherwise, he has deposited the amount in e-cash ledger. It's so reasonable. Why there would be demand, and that too with recovery for the interest amount? This amount was never withdrawn. Somebody asked me in that chat that can we really take back this money without any order? Yes, now they have opened the window. Now you can file your refund claim under any other category pertaining to your money lying in e-cash ledger, and he should not stop for any known, any wanted or unwanted region. So this is my third point. Coming to the fourth component and last component of the day. Do you know that now return filing, sequential filing of GST return is being introduced? How many of you know that? Please tell me yes and no in a chat box that you know that. Sequential filing of GST return, have you heard of? First say yes, you know about it. Tell me yes, you know about it. Say yes, that you are aware of. Sequential filing of GST return is being introduced. And introduced long time back. It's not like that just last month I'm referring to, or budgetary changes. No way, it's long time back. How many of you know about it? Sequential filing of GST return. If you do not know, listen to me carefully. That is the last point which I want to deliver today. What is sequential filing? We have seen that we got dispute that my supplier recipient today is having a problem. Problem of what? Supplier is not a tax compliant. Sometime he's filing GSTR1, but furnishing wrong particulars, which is not getting auto-populated in 2A or 2B. Sometimes he's filing 1 but not paying taxes, 3B. He's not paying taxes. Or sometimes paying taxes through 3B but not filing 1. Lot many situations. And supplier is having inherent problem there. 1 and 3B is not matching. Lot many non-compliances on the part of supplier is a bottleneck for recipient to avail credit, right? Today, recipient is struggling to avail ITC just because his supplier is not tax compliant. So what all changes is being introduced in the GST law, which is sequential filing of GST return, and thereby over a period of time, this dispute will go away, and there would be 101 matching also, but it will take time, 6 months to a 12 months time period. But what are those provisions? It may happen when you're talking about recipient, you are supplier to someone else. So maybe compliances on your part. Because of your non-compliances, your recipient is struggling to get the credit. It's a supply chain until it reaches to the last customer. So supplier need to be tax compliant. So what is the provision? Listen very carefully, very carefully. Rule 59 sub-rule 6 is very interesting provision. And what this provision is saying, from 1st January 2022. So I'm standing on today, 29th of February. We are into leap year, unique day, 2024. The change which I'm telling you, effective from 1st January 2022. I'm a taxpayer. I want to file my GSTR 1 for the month of February. I need to ensure that I have filed my 3B of preceding tax period, January month. If I have not filed 3B of January, then I will not be able to file GSTR 1 for February month. Do you know this provision? This is existing on GSTN portal. How many of you know about it? Tell me yes. I want to see yes in the chat box that you know about it. Can I see yes that you're aware of? Say yes that you're aware of. So it is working. It's very good, right? Because now a supplier will make the payment of tax. Only he can file 1B. Then only he can file GSTR 1, right? GSTR 1. Now listen how interesting it is. If supplier is having inherent difference 1 versus 3B, he's filing 1 for 10 lakh rupees liability, but making a payment of only 5 lakh through 3B. So difference, right? 1 versus 3B. Can he continue to do that? Rule 88C, introduced from 26th of December 2023 or 2022. I must correct. 26th December 2022. 1 versus 3B, if there is mismatch, then that is going to be called self-assessment tax as per section 75 subsection 12. And that can be recovered even without issuance of so-called notice as per section 79. And rule 88C you must be aware of. Introduced from 26th December 2022, 1 versus 3B, you will get the notice. Part A, DRC 01B, which you need to reply back within 7 days or pay the differential amount. So you can't carry on having differences between 1 and 3B. Second check. Third check, section 37. Section 37. If I want to file a GSTR1 for the month of February, I need to ensure until January, I've filed my all GSTR1. So until I filed GSTR1 for all preceding tax period, I will not be able to file current tax period GSTR1. So it's good that a lot many supplier who has not filed GSTR1, and because of that, it is not getting auto-populated in 2A, 2B for the recipient, and they are being denied credit. This problem will go away. And this provision got introduced from 1st October 2022. 1st October 2022. Another change effective from 1st October 2023. There is a timeline now prescribed for filing of belated GSTR1. 3 years maximum time period, unless otherwise extended on recommendation of GST Council. So maximum time limit 3 years for belated GSTR1 filing. And this provision made effective from 1st October 23. It's a part of all sequential filing. Come to section 39. If I want to file 3B for the current tax period, February, I will not be able to file for the month of February. First I will 1, then I will be able to file 3B for current tax period. And in your mind, 1 and 3, there should not be mismatch. Otherwise, notice Rule 88C, subsection 12. So first file 1, then 3B. And this provision made applicable from 1st October 2022. Next change, 1st October 2023, the time limit prescribed now. Billion GS3B filing. Time limit now. 3 years time limit prescribed for file related GSTR3B, unless otherwise extended on recommendation of GS Council. In section T4, where annual return, including self-certificate reconciliation statement 9 and 9C, belated. If there's a 9 and 9C, time now prescribed 3 years. Am I there?
Sir, your video is not there.
Am I there now?
Yeah. Yeah.
So I was referring to point maximum period. I don't know, automatically getting switched off. So maximum time period is now 3 years for belated filing of 9 and 9C. Under section 44, 3 time limit. So these are the provision towards sequential filing. Along with, tell you, change under 59 sub-rule 6. If there is no compliance pertaining to 88C, which is 1 versus 3B, effective from 26 December 22, be able to GSTR1. A non-compliance of Rule 88D, 2B versus 3, effective from 4th of August 2023, 4th of August 2023, non-compliances, you will not be able to file GSTR1. If there is non-compliances pertaining to Rule 10A, which is the furnishing of your bank details with registration, compulsory, effective from 4th of August 2023, you will not be able to file GSTR1. So these are the provisions with respect to sequential filing GSTR1 and 3 forward. So I do not know this video automatically switching off. What happened? Maybe for my audio, it is automatically switching off. But this is what fortunate part. I've completed my presentation, my deliberation today. And let me compliment all my participants today who have taken out the time and joined me together to discuss all four important issues. Let me ask some question to my participants. Let me ask some question. And before you go away, give me 5 minutes more. You have listened to me for almost 1 hour, 15 minutes. You can just wait for 5 minutes to listen my voice. I'm just asking you. I've clarified what is ISD and cross charge. I've also clarified what changes are being brought in ISD concept, way forward, perspective. You have to just tell me yes in question answers tab, or you can just thumbs up so that I get a clarity. Yes, Bimal, without PowerPoint presentation, my audience is so learned that they have understood it. Can I see that thumbs up or yes in a question answers tab? Maybe your yes. Okay. Okay. Super duper. Thank you very much. Super duper. Excellent. Thank you very much. Second, I also discussed about that penalty for non-registration of machine for specified manufacture for specified goods, tobacco, pan masala, gutka. I hope that part is also clear to all of you. Hope that part is also clear to all of you. Can I see once again? Yes. Can I see? Because I've got some question then thereafter. I got some question thereafter. Okay. So next, then I talked about that money deposited in e-cash ledger can be considered as good as tax paid. No interest should be demanded as per the Madras High Court judgment, but I have created all crux point of that judgment. Have you understood it? Tell me yes in question answers tab that you understood it. That's clear to me. Okay. Thank you. And last, sequential filing of GST return started long time back. Rule 59 sub rule 6, red bit 75 subsection 12, red bit section 37 changes, section 39 changes, section 44 changes with different date. Sequential filing, maybe way forward 6 to 12 months we will have more clarity, lesser dispute pertaining to credit availed by the recipient, because credit is going to be dependent on tax compliant supplier. So when we are saying my supplier need to be tax compliant, equal responsibility on us to be compliant as a supplier when we are supplying to other customer. With this, you can always say and give your feedback, which I always admire and really appreciate. I hope you have enjoyed today's session. If you have enjoyed today's session, your feedback is important. Your comments are important. Writing one small liner in a question answer tab help me to understand and read who is writing what. At least I recognize that they are the person who are taking out time and writing some stuff in the question answer tab. Of course, I always try to make my best, but definitely your point of appreciation highly appreciated.
I guess some issue with sir's network, maybe. Folks, are you able to hear or see me? All right. I'll just DM Bimal sir, so that there were a few questions that were being asked by the attendees, so that he can address it. I'll just drop a text to sir.
Oh, can you hear me?
So I was just going to text you. Now you are absolutely
Okay,
uh,
okay.
so, sir, well, first of all, very, very insightful session. And I think our attendees are learning so quickly that we have very less number of questions today. So I think they have been following you really well. So without further ado, what I'll do is I'll start reading the questions and the question asker, and sir will provide with the answer. So the first question of the day by Mr. Devanand. So my question is different. GST REG registered certificate issue date is 8/9/2018. Period of validity 8/9/2017. Return filing due date 20/10/18. Return filled 4/3/18. Department charge interest CGST rupees 1261, SGST 1261 for FY 17/18. Today, for the 29 to 24, STO calling for payment of interest, initially interest waived, nevertheless now calling for interest payment. What to do in this case?
You need to substantiate and reply accordingly. I know there are many problem, Mr. Devanand, it is coming. And why they are creating this kind of complication, it is beyond my understanding. But you should substantiate and defend yourself, because these are all factual positions which you need to demonstrate before them.
All right. By Mr. Vikash, sir, whether registration to be taken within 3 days or payment of 1 lakh is to be made to avoid confiscation.
See, registration to be taken within 3 days, that is to avoid the confiscation. But penalty is important. That need to payment is to be made. Registration and payment both are important. See, first you pay, then confiscation can be avoided, and second, registration is a must, simultaneous provision, because.
Right. By Mr. Amar, whether ITC needs to be bifurcated, which is pertaining to services used for outward services as cross-charge service and other common services for distribution, and as ISD for the transactions, those which are booked and availed before ISD, related provisions become notified.
See, my answer to this would be, Amar, that from a date to be notified, you can create a cutoff. So until this date is notified, yes, as per circular, we can follow cross-charge method even for ISD. So maybe you can just decide in advance. Let's say 1st April, which is coming, April 24, new financial year going to start. So why can't you have, we know that this provision is now made mandatory and compulsory, and from a date to be notified. But it is quite obvious we can take ISD registration and start with a fresh slate, that all ISD related go into ISD domain and cross-charge will go to cross-charge domain, which is internally generated, to have bifurcation clearly done, as against it is coming in between year and creating complication for you. Amar, hope I'm clear to you.
Next question by Ms. Sheetal. Sir, suppose I have deposited additional amount on monthly basis continuously. Can it be said that I have deposited cash for the liability arises at the time of filing GSTR 9 for the respective year and interest will not be levied?
So GSTR 9 is not the return which is being considered for discharging the liability. Then DRC 03 is the concept. So Sheetal, I beg to differ.
All right, sir. So there is a long question by Mr. Harinder Kumar. I'll be dictating the question. Respected sir, my question is not related to this today's topic, but it is very urgent for me to understand. If we purchase a land and then after doing the full construction on it, and after completion of full construction, we use this constructed building for renting purpose. So in this case, can we be eligible to take full ITC on purchase of building materials and service procured on it? I know one case is pending in Honorable Supreme Court in case of Safari Retreats PVT Private Limited versus Odisha High Court. Note number 1, we will use this building only for renting out. Note number 2, we are not only or purely engaged in building construction business. We have separate business activities along with main manufacturing taxable business.
Energy as per section 17, subsection 5, clause C and clause D, quite obvious that credit is not available, and which is what being disputed before Honorable Supreme Court in Safari Retreats. So it's a big debatable issue, and law provision is restricting that credit is not available. Of course, after renting, you are using for taxable outward supply. So credit should be available, but as per the provision, credit is not available. And this is the crux point in Safari Retreats. Even when you are using that building for your own purpose, let's say you're a factory, getting factory and factory being used for manufacturing of taxable goods, even though credit is not available, and for service providers, similar concept. So this is a disputed point and subjective issue before Honorable Supreme Court. I'm of the view that court will be PT on that, but court will say that is what law provision today. If you want to make changes, let's GST Council make the changes, make the recommendation, and make changes in the law.
Mr. Arup, which taxable value to be reported in GSTR 1 table 14 for sellers through e-commerce operator? Is it the net taxable value reported by such e-commerce operator in its GSTR 8?
See, this need to be reconciled. It is related to return filing. I'm putting my own disclaimer that I do not know, but of course it need to be cross-checked with the supplier and e-commerce operator.
Shiny. Suppose I am having two machines in my manufacturing unit. Is it necessary to take two registration under GST?
This per machine is not two separate registration. Those machines should be registered under that registration. Who is saying that machine-wise two separate registration? Those machines should be registered. So under the registration, you are having 40 machine, those 40 machine like that.
Right. Just a second. I'm dictating next question, sir. Okay. So by Sagar, just one question. What is the significance of Rule 87 by 6 and 87 by 7 in this related to CIN generated post payment of tax?
See, their cross-reference need to be, Sagar. It can't be read in isolation. Of course, when you said the challan identification number, CIN is a challan identification number. So it happened when you are making payment through a banking channel over the counter. That is what I'm getting it. I do not know what is your specific, but CIN referred to challan identification number.
Mr. Jaikishan, sir, an assessee had already deposited interest on the amount which was timely credited to electronic cash ledger. Can he go for refund now, taking the basis of Madras HC judgment?
Oh, Jai Kishan, first of all, litigation that they are not agreeing that whatever deposited in e-cash ledger is a payment. Now you're talking about refund. It is not settled as yet, but definitely if gets settled by Supreme Court, then of course he can demand and go for refund.
All right. Some medicines are GST free. What does it mean? Are those medicines nil rated or taxable at 0%? Where to report such medicines in GSTR 1, in table 1 and 7 or table 8 by Mr. Arup?
It is exempted supply. Exempted supply, if you go back to the definition, those which is nil rated or exempted by way of exemption notification. If something which is nil rated, taxable at 0%, it is exempted supply. So accordingly, you have to show in table 8.
All right. So we are closing renting business and as sale of premises. Now we have premises sale brokerage of ITC of 3 lakh. So can we reclaim the same in last return? If we have excess ITC of it, can we get refund?
No, you will not get the refund, but definitely if it is for renting taxable output supply, you can claim credit and credit can be carried forward. No refund will be permissible.
One question by Mr. Ranjit sir, can you help to get PPT of webinar dated? I would like to answer. Vimal sir does not read through a presentation. Everything is here in his own random access memory. So I'm not sure how sir will help, but he can help you with the pre-recorded webinars as far as I am knowing it. By Mr. Sagar, freight forwarding paying freight to outside India party for third country shipment, whether RCM will be attracted by Mr. Sagar.
See, this is a very subjective point and subjective issue, Sagar. For third country shipment, whether RCM will attract or not, of course, to my mind, it is not leviable.
All right. So last question for the day. Sir, do you agree that cross charge was a better method than ISD to transfer ITC to assessee own units?
See, whether you want my view, then both are, these two terms are different concept altogether. Cross charge, it is for when there is element of service. Internally generated services are being provided by one distinct person to another distinct person on the same PAN number. ISD only to distribute the credit. So corresponding question of valuation, lot many factors are therein. As per me, if you want, these two concepts are different and distinguished and need to be followed separately.
Sir, I have just received one important question. So, for the sake of everyone, and I just repeat, I'll ask this question. Last question for the day by CACV. HO having one BO, both are in different states. ITC on input services available in HO exclusively belonging to BO. HO does not have any taxable services except RCM. Is it required to distribute ITC related to BO? But there is only one BO. Is still ISD required? If so, compliance burden.
Of course, it's a compliance burden, but you can't keep the credit to you, which is pertaining to the branch office. That is what Suryam all about, and that is what the concept all about. So can you keep the credit of other branch which is being used by them? So to my mind, you have to understand, yes, compliance burden. So you can change the business model. Why you're taking invoice at HO? Ask supplier to raise the invoice to branch office so that compliance will get down, will get reduced. So you have to just apply other way around rather than putting, you're reading one way. Other way, you can make it very simple. Ask your supplier to raise to branch office only.
I think, sir, with this, we can conclude today's session. And folks, do not worry. We have all our webinars recorded and we would be sharing it via mail soon. So, sir, over to you for your parting away thanks of gesture.
Okay, so I know that everyone, really try their best and take out your time and really attend this webinar. We are trying our best that, with Zoho Books, we are taking lead at least to create handholding, to provide whatever best we can do from our side. And of course, we are trying our best to make GST good and simple tax. But nevertheless, keep in touch, lot many things happening. You really, touch base on our social media, including Zoho Books, and then anything which is coming to your mind, we would be delighted to, take out time and respond back to your queries. With this, I'm saying that see you again, not bye-bye. See you again. And of course, God bless all of us together. Thank you very much.
Thank you, sir. See you for the next webinar, folks. Thank you for attending. Thank you.
Thank you. Thank you very much. Thank you. Thank you.